added some verbiage to make this trading day a little bit more plain for those that may not understand. So here we go. The market opens, pushes up. This is the high of day, and then we see that there's a gap. It gapped up. This was the previous close yesterday, so it gapped up. What we do see, if I zoom in a little bit, is that boom, it dropped here. See, we have some support here. It bounced off of that support right there. See, it correlates. Bounce here, and then boom, it fills the gap. But right here we see the gap is complete, and it bounces off of that. But we have the same resistance here, resistance here, resistance here, so it pushes lower, but then it finds support, bounce off of support once, bounce off of support twice, trying to push up, but it has no real strength. It consolidates here, breaks low, and then boom, we have a push up. But look, if you go left, always go left, you're gonna see it's meeting that same resistance point, and it drops back down here to bounce, but we see a little bit of support here, right? But it's really here as well, and then boom, the day's ended, and that's what happened. And that's why it's so important to mark levels, and that's why we say there's patterns and history of things that happen in a trade, because if you look closely to the trade, you can see all these things correlate. The gap fill right here, this is where the end of the gap was filled, and it bounced exactly. Look, from right to left, it bounced right there. So we have a downtrend, one, lower lows, lower highs, but it bounced there, 1, 2, right? Correlating with everything on the left, and then boom, support, bounce. See, there's patterns. This is why this and this is in the same exact spot, because this is where the buyers are, the pocket of buyers are. But we see it had no strength to go, but we did see it consolidate. See, a lot of fighting was going on here because there's selling pressure, but there's also buying pressure. Eventually it did break, but just got pushed right back up. And that's how trading goes. But if you mark out these levels and you're able to see the picture, because we're trading the picture that we see. So if you mark all these things out and you're able to trade the picture that you see, then you can make a decision on what you think is happening, right? When you see it being rejected here, and then it's making a lower low, and then you see that the gap is here. So you notice that you're going to put your take profit just a little bit before it hits here, because you know you're going to get that bounce. And this was where what I would mark my take profit around here. Before it gets to this, you got to leave a little meat on the bone, because you're going to see that bounce here. And then after you see the rejection here, guess what? You can short from here to here again and make a nice little tidy profit. If you want to trade the market on the bounce both ways, bing, you can take this one. And as you can see, it doesn't have as much strength. So if you wanted to short again, you could here, but I wouldn't. It's just pushing it. At this point, if you look down at the bottom, you can see it's around 12 o'clock noon to 1 o'clock. So this is when the market is kind of weakening, slowing down. People are taking lunch, and you can see it's not too much activity going on here. A little bounce later, and you could take that. But this is just a long thing. I'm out of the market. I'm done with my trade by here, because we make our money and we go play it. You heard? So if you want to learn how to trade, if you want to learn how to do technical analysis, just click the link in the bio. You can trade free with me for a day. I am offering my founder special. It's $99. So let's trade to win. Let's make some money.